concept of no tax on tips. Y'all don't understand it, the employees don't understand it, the attorneys are having a hard time ourselves understanding it, in all honesty. And here's what this breaks down to. The no tax on tips does not mean that you as the employer are not reporting the income of your tipped employees on their pay stubs. There is an affirmative obligation under federal law that cash tips and credit card tips must be reported on their W-2. And that also means if it's reported on the W-2 under California law, Labor Code Section 226, you are obligated to make sure that that is a line item entry on every individual employee's pay stub. So any employee who works in the service-based industry or who receives tips in any way, shape, or form, you must have a separate line item, wages, and then tips beneath that. Oh wait, there's more. Beginning in 2026, you're going to have to designate what is qualified tips and unqualified, non-qualified tips. You will have to have two separate line items on their pay stubs from at least 2026 through 2028 when this tax credit will actually kick in. What the One Big Beautiful Bill did in July is it gave a personal tax deduction to the employee, not a complete exemption from federal tax. It's just a federal tax credit that they get back at the end of the tax year. When they file their taxes by April 15th of the following tax year, they'll actually get back the portion of federal tax that was withheld from those tips by the employer, and they'll get that back as a cash refund. They still have to pay FUTA. They still have to pay Social Security. They still have to pay Medicare, and great state of California, you know they're getting their piece. So they're still going to be requiring state tax, STI, and UI taxes being withheld. So all of those taxes still get withheld. They still get paid to the taxing agency by the employer, and then the employee has the right that when they file their tax return, they can seek recovery of those tips up to $25,000 of